Welcome back to Business Daily here on Trust TV. Now, before we get to our conversation of the day, if you recall, in our top stories, our first three stories, we didn't talk about it, we skipped it, talking about the president sending a repeal enactment and reenactment bill for the 2025 budget, the Senate having its own say on it, and of course in the House of Reps, they are talking about the tax. There's a discrepancy. Gazetted paper and what has been published are not the same thing. However, let's look at this story from the House of Representatives talking about those issues. In a letter titled Transmission of the Appropriation, Repeal and Reenactment Bill Number 2, 2024 to 2025, President Tinubu urged lawmakers to consider and approve the revised budget in line with constitutional provisions. The bill seeks authorization to withdraw a total of 43.56 trillion naira from the Consolidated Revenue Fund of the Federation for the 2025 fiscal year. Following its presentation, the House passed the bill for the first and second readings.
This bill is to bring an end to the practice of running multiple budgets concurrently, while at the same time ensuring reasonable, indeed unprecedentedly high capital performance rates on the 2024 and 2025 capital budget. It further provides, through a transparent and constitutionally grounded appropriation mechanism, for the orderly consolidation and appropriation of critical, time-sensitive expenditures necessarily undertaken in response to emergency exigencies, advancing the collective well-being of Nigerians and safeguarding national security.
Meanwhile, the House of Representatives has stepped down consideration of the 2026-2028 medium-term expenditure framework amid concerns over revenue projections and potential funding shortfalls. The House had earlier resolved into the Committee of Supply to consider a joint report by the Committees on Finance and National Planning and Economic Development, chaired by Honorable James Faleke.
Of 4.68, 5.96 and 7.9% for years 2026, 2027, 2028 respectively, amidst reform in the Nigerian economic and prospect for reforms to take effect in 2026, it's recommended that the projection for the real GDP be sustained. The real GDP growth rate projected at 4.6, 5.96 and 7.9 for years 2027, 2028 respectively, be sustained in anticipation of the gains of the tax reforms.
Concerns raised by the Speaker of the House, Abbas Tajuddin, over possible revenue gaps prompted lawmakers to defer further consideration of the framework, allowing the relevant committees time to address the issues identified.
If you have cause to reduce the benchmark proposed price to 60, it would mean there would be a deficit of $5 for each barrel. This will also have an impact on the total revenue that we are expecting from the oil and gas sector. And that will affect this 54 point something trillion that has been earlier proposed.
Responding, Speaker Abbas Tajuddin assured lawmakers that the matter would be thoroughly investigated and resolved in the national interest. He reaffirmed the House's commitment to continued engagement to ensure fiscal transparency and legislative integrity as deliberations on key national economic policies continue. So there you have it. More information on what happened actually on the floor of the Green Chamber yesterday, Wednesday, in the plenary, talking about the budget. That's been an issue, talking about the MTAF, FSP, but now the budget. The Senate President a few days ago said that the budget will be presented this week. Today's Thursday, hopefully, and today's supposed to be the last day of plenary sittings, officially for the week. Let's see what plays out. Maybe before Friday, maybe something would happen and the budget might be presented. But away from budget conversations, let's get to our matter of the day. We're going to do a review of the pension sector. So many reforms took place this year, 2025. And joining me virtually here in Abuja is Sani Mustapha. He is the Senior Technical Advisor for COPHERA, which is the Contributory Pension and Happiness scheme, and equally the former director of corporate service at PTAD. Good morning. Thank you for joining us on the program this morning. If you can hear us, we're just going to reel out, because I can't hear you clearly right now, but hopefully that will clear up as the program progresses. Now, just a brief, for those who are not aware of these reforms that have taken place in 2025 in the pension sector, a brief, overview. Now, there's been for one of them, or the first one mostly, is the faster benefit payout or payments and improved retiree experience. Now, it's become decentralized benefit approval started from June 1, 2025, where the PFAs, that's pension funds administrators, can now approve and pay programmed withdrawals, lump sums, and temporary loss of employment benefits without prior PENCAM approval, significantly reducing delays. So before now, you need the PENCAM, that's the Pension Commission, to approve before the PFAs can pay you what you need. Now, zero waiting time policy. Retirees now receive benefits immediately upon exit, improving trust in the system. Accelerated accrued pension rights payments. Backlogs for the federal government of Nigeria retirees have reduced, with payments cleared up to those who exited service in March 2025, moving toward full arrears elimination. Now, 2, improved welfare and social protection. Increase in minimum pension for DBS retirees. Minimum pension monthly raised to 32,000 naira, alongside harmonization of rates. Now, there's been an introduction of gratuity payments. FG working to ensure gratuity of federal civil servants under the contributory pension scheme, addressing a long-standing gap. And now there's a pilot health insurance for retirees as well. Now, there's been a planned rollout of health insurance for low-income retirees to improve post-retirement welfare. Digitalization and operational efficiency, new pension contribution remittance system, a fully digital platform for employer remittances, reducing errors, delays, and non-compliance. Revised PTAD service charter, clear service timelines and accountability for defined benefit scheme pensioners. Now, this one, we were all aware of this one. It took over, we talked about it on the program as well. Stronger regulation and financial stability. Remember, earlier in the year, the capital requirements was increased for pension fund administrator. Actually, 3 sectors this year have had to, capital requirements have had an increase. The pensions, the insurance, and the banking sector. We're also waiting to see how many banks have complied. As the last time we spoke, it was about 14 banks so far, according to the Apex Bank Governor Cardoso. Only 14 banks have somehow been able to meet up with that recapitalization. And now the PFAs have gone from 20 billion naira, actually from 5 billion naira to 20 billion naira for PFA, and PFC's 25 billion naira. And of course, they have until 2026 to meet up. Now, I see that my guest is agreeing with some of the things that I'm saying. Of course, he's in the sector, and we're going to ask him this important question. Now, Mr. Mustapha, tell me, these reforms still far have listed out. There's still more. How well do you think that the pension sector have actually done in 2025? Mr. Mustapha, can you hear us?
Hello.
We seem to be having some network and technical challenges. We would try to fix that and, of course, get him back on screen to speak with us. So while we're waiting for that to get fixed, operators have until December 31, 2026, encouraging consolidation and sector resilience. Stricter compliance enforcement. From November 2025, entities without a valid pension clearance certificate are barred from pension-related business. And judicial collaboration, improved enforcement and dispute resolution in pension administration. So now, when the issues, when it comes to pension issues, it's supposed to become easy to go through the judicial process and come out with a proper and maybe favorable resolution. Now, clearing liabilities and funding confidence. 758 billion naira of FGN bonds issued to clear pension liabilities, easing pressure on retirees and strengthening system credibility. Improved funding discipline for both the CPS and DBS obligations. Expansion of coverage, informal sector focus. Micro pension scheme rebranded as Personal Pension Plan PPP, designed to attract informal sector workers and diaspora Nigerians. Significant growth in registrations through funding levels remain a challenge. However, increased outreach and incentives have deepened participation. Mr. Mustapha, can you hear us properly?
Hello? Yes, I can hear you. Can you hear me? Can you hear me? I can hear you.
We still seem to have, I still seem to have a challenge with being able to hear Mr. Mustapha at the moment. We'll go on a short break, and when we return, the conversation continues. To stay with us, please. Welcome back to the program here, Business Daily. Now we've been trying to, keep and get our guests to join us on the program, and hopefully that has been such a good morning again, Mr. Mustapha. Thank you for joining us on Business Daily this morning.
Good morning. I hope you can hear me now.
Yes, I can hear you now. It's actually good to hear your voice. Thank you again for joining us.
Thank
Now,
you.
as
Thank
I
you
earlier
very much.
asked, but due to the situation, we couldn't hear your response. What do you think, or what do you make of these
Yes.
reforms now the pension sector has fared in 2025?
Well, let me say in one word that the pension reform had been reborn in 2025. All facets of the pension business have been energized by the work of the regulator and the cooperation of the federal government of Nigeria. Actually, the promise of payment of pension as at when due and promise of funded accounts have been having issue for all the time this reform have been implemented because of the singular act of the federal government then of not paying the accrued rights. But single this federal government led by this president approved all the outstanding accrued rights, which means pensioners as their pension. And this money had been released on one and had been monetized. So pensioners are very happy. And the regulator came in with so many changes inside the business of pension. For example, the increase in the recapitalization, that's increase in capital, because they are handling more pension money now, so they have to recapitalize. And the benefit processing, this one touches on individual pensioners. Hitherto, pensioners will wait for 3 to 4 months before they get their benefits. At a go, this leadership of the regulator changes that to 24 hours. Once you finish your documentation, then it's incumbent on the operators to release your funds in 24 hours. This is a paradigm shift. In Nigeria, businesses, parastatals should actually look at how PENCOM works and learn from it. Then
Okay.
the issue of the micro pension, it has been redone. Hello?
All right. Okay. Apparently, we seem to keep having that and network challenges. And you've heard him, there's so much that has been actually done. We just gave an overview, but he's gone in depth to talk more about it, saying that prior to now, it would have taken about 3 to 4 months, even after you've done your documentation, to get your benefits. But now, due to these reforms that have taken place in 2025, it's now incumbent and really, really put upon the administrator, an operator, to give you your funds in 24 hours once you are done with your documentation. So you see, these reforms have really actually done well. And he said again, now that you're handling more money, is expected for you to now have more capital base. This is why when you see this recapitalization stories come up, it's because so that the firms, if something were to happen to them, they would be able to pay you back your funds. If you're going to be able to handle voluminous amounts of money, you should be able to have so amount down somewhere as capital base. Peradventure something happens, you'll be able to, refund to a certain extent. Mr. Mustapha, have you joined us back? Thank you again for joining us. Now, let me get to a question. Yeah. With this benefit approvals now, as we said, you said it's now brought down to 24 hours and it's now been decentralized to PFAs. You'll make it easier now for people to get their money. What safeguards are being put in place so that abuse doesn't come into play, favoritism doesn't happen?
You see, the pension sector from day one, they envisage all these issues of bad Nigerians trying to do fraud like they do in the DBS system. So it is such a very tightly, woven unit such that between operators, they work with technology. Your biometrics from day one are captured inside your retirement savings account. Nobody can go between you and the operator. The chances of fraud is really near zero in this contributory pension. Now, you also look at cases going to EFCC on pension fraud. You find out that very little comes from the contributory pension. It's only in the defined benefit pension scheme that you usually have fraud.
All right. Is the one of the other reforms that we rolled out was issue of gratuity being reintroduced again for federal civil servants. Now, do you think that this is financially sustainable, and how do you think it would be funded long term? I'm sure great idea for gratuity to be paid again, but how is it sustainable financially, and how will we fund it in the long term?
It is very sustainable. Gratuity used to be paid even in the other pension scheme. So when the contributory pension scheme came, they now said no, they will only pay lump sum out of what you have contributed. But 20 years into the implementation of the committee of the contributory pension, it was found out that because the salary is low, pension is also low. So the lump sum is also very low. Therefore, there is a lot of dissatisfaction. Nigeria can afford to pay the civil servants that retire gratuity. So this thing will not add any big funds to what the federal government expends in a year. So gratuity is very sustainable, and it will make people to really agree that the contributory pensions scheme is a friendly scheme, is a sustainable scheme, and is a worker-oriented scheme.
All right, let's go to the informal sector. They've not been able to, harness this contributory pension scheme so far. But how do we bring them in, especially with this upcoming personal pension plan. How will that work into getting the informal sector into a pension plan? Because it seems like the only people who have some pensions are people who work in organized structures, whether be it government or private sector. They're the only people who seem to benefit from pensions. Now, for the informal sector, how can we get them to become beneficiaries of pensions? Seems we've lost Mr. Mustapha there again.
Hello.
I can hear you. If you go ahead.
Hello.
I can hear you. Go ahead, please.
Yes. The current leadership of PENCOM have done well to do over the old micro pension scheme. They looked at all the facets and make them very incentivized. For example, the new pension plan has also children. Initially the contingent portion that you can access. For example, if you are paying if you have a balance of, let's say, 10,000, 40,000 you can access it for Salah or Christmas. This thing has been extended to be almost 50%. So that one will make the informal workers to be happy to key into this scheme. Even their children will now be covered under this. And then there is the accredited pension agents, such that it may not only be the PFAs that will go around to market this scheme. These accredited pension agents will also be going around to get more people. Actually, what is lacking in the scheme is awareness. People need to be aware. Information needs to be inundated to all the informal sector. You have to meet them in their working place, meet them at churches and mosques, meet them at home to tell them about it and explain, because Nigeria is changing. Everybody needs to set aside funds for the rainy day, for the time when he is old. And this thing, this PPP that is brought is very good for Nigerians, because whatever money you save will not be taxed. People are apprehensive of the January 2026 taxes coming. People, when you put your money into this PPP, that taxes will not touch your money. Your money will be tax-free. Even if you put your money in bank, government will go there and look at it and take part of it as a tax. But when you put your money in the PPP, your money is protected from tax.
All right. We'll touch a bit on the tax thing towards the end as we round up. But just before we go there, we were talking about informal sector. In the formal sector, what's the PENCOM's plan? What are your safeguards to ensure that when employers delay, that they're dealt with immediately?
Actually, the payment, there is what they call payment solution service providers. This is a seamless system where an employer can pay from their own systems to PENCOM, ensuring that the names, their RSA numbers of their staff are all correct, so that there will not be any downtime for this money to hit their accounts and start earning money for them. And it is easy for PENCOM and any other stakeholder to check whether they have paid for their pension or they are still owing. So going to banks, joining a line has been reduced now. You can do it from the comfort of your office to pay for pension contribution.
All right, now, 2025 is wrapping up. We're just about 12 days, 13 days away to say bye-bye to year 2025 and enter 2026. beyond 2025. What more reforms do you think that the Nigerian pension sector needs to, to meet up to par and deliver great dividends to the people that that are involved in it?
I believe that the reforms they did in 2025 are like you put a seed on the ground. They will start growing up in 2026. I don't know whether I made mention of the dollar account. Now people abroad can open a retirement savings account and fund it with their currency. And the alliance of the PFAs have more products so that more money can be made for the pensioners. I believe 2026 is going to be very good for pension and pensioners. The regulator will have less work in 2026 because they have done most of the work in 2025. I believe pensioners, most of the pensioners of federal government, they receive almost 500,000 inside their retirement savings account, thanks to that 758 bond, So, and pensioners that are receiving, for example, I just attended one program yesterday where a pensioner told us that he was receiving 65,000, but his pension is now 96,000. So if you calibrate it with other pensioners, pensioners are really going to thank this federal government. They will thank and pray for the regulator. And I'm sure they will thank and pray for Trust Fund, Trust TV for bringing this kind of program and awareness.
All right, thank you so much, Mr. Sani Mustapha, for your insights on the pension sector reforms in 2025.
Thank you very much. I hope to see you in 2026, happy and enjoying your life.
Same here, same here. Thank you so much. Actually, very good prayer. I hope to see all of you in 2026 happy and enjoying your life. As he said, when you put your monies in your pension, they're not taxable. Hopefully, tomorrow we're talking about the tax, the new tax regimes, so that you get informed and get aware. And of course, get prepared for what's coming in 2026. That's it for Business Daily this morning. I've been your host, Chiamaka Nwanfor. For our programs, do want to follow us on our social media platforms, on our YouTube live stream for more news, programs, and documentaries. Same time, same place tomorrow. Bye for now.